Welcome back to Crypto Unlocked. I'm your host, Crypto Darrell, and they always said that Bitcoin would thrive in these types of times, that it was created out of a financial crisis for this exact purpose, to give people an escape, a decentralized lifeboat in the middle of the centralized collapse. But now we're here in the thick of it. Not a theoretical collapse, not some slow burning macro fear. No, we're talking about missiles in the air, war on the ground, and Bitcoin, the king of all the digital jungle, isn't mooning. It's hesitating, and everyone's wondering why. Let me break this down in a way that everybody can understand. The war between Iran and Israel has reignited deep global fears. Fears that don't just ripple through oil markets or commodities, but shake the confidence of the entire economies. When the first missiles were launched, Bitcoin didn't surge in response. It dipped. It didn't become a safe haven overnight. It started acting like every other high beta asset, sensitive, cautious, volatile, because Bitcoin, while decentralized in theory, is still psychologically tethered to global risk sentiment. And the sentiment right now is fear. This isn't retail fear. This isn't that kind of panic that causes people to rage sell altcoins. This is institutional fear, the kind that triggers cash positions, offloads risks, and sidelines billions into dry powder. This is when hedge funds rotate into treasuries, oil, gold, or even just the dollar. Liquidity drains, bid depth thinouts, the order books become landmines, and Bitcoin, sitting in the middle of a storm, becomes a mirror for a broader market sentiment. It becomes reactive. Very reactive. Now, most influencers aren't going to tell you this right out loud, so I will. Bitcoin is not currently treated as a true hedge by the majority of global capital. It is seen as a speculative instrument, a volatile play, a tech-adjacent asset with upside when the world is stable and central banks are dovish. And right now, stability is a myth. Central banks are cornered, and the headlines are dripping in blood, oil, and uncertainty. What happens in war? Liquidity gets sucked out of risk markets, everyone becomes defensive, and Bitcoin fills it fast because it's global 24/7 and highly emotional. When Israel retaliated and Iran threatened a response, the market didn't wait for a press conference. The selloffs began immediately. Bitcoin pulled back not because it's fundamentally changed, but because liquidity collapsed. Buyers got scared, sellers took profit, and the low volume, emotionally driven chop began. And here's the truth. When liquidity vanishes, volatility fakes you out. A $15 million order suddenly moves the price by $1,000. Bots start sweeping range levels, whales create wicks for breakfast, and if you're not watching the order book, you're going to misread the whole entire market. Bitcoin didn't crash. It reacted the way that all assets react in chaos. It looked for cash. But let's zoom out from the fear and get surgical, because this isn't just about war. It's about the story of war. It's about the fight between the old system and the new one. On one side, you've got legacy narratives, oil prices, sovereign debt, interest rate manipulation, and closed financial systems. On the other side, you have Bitcoin, borderless, permissionless, programmable money with no political bias and no centralized gatekeeper. This is the clash of monetary worldwide views. This is exactly why Bitcoin exists, but that doesn't mean the world will accept it instantly when bombs start flying. Because here's the nuance that 99% of the people miss. The moment Bitcoin was supposed to prove itself isn't during the war, it's after. When the smoke clears, when the dollar gets debased to fund another foreign conflict, when bond markets collapse under the weight of endless spending, that's when Bitcoin shines. Not in the fog of the war, but in the aftermath. That's when people realize what a non-sovereign monetary system actually means. But right now, traders are zoomed in, they're staring at 5-minute candles, they're screaming about fake outs and liquidation wicks, and they're missing the forest for the trees. This isn't about whether Bitcoin is up 3% or down 5%. This is about the macro thesis playing out in slow motion. Let's not forget, every time a major geopolitical conflict emerges, it leads to monetary instability. Currencies get debased, Debt gets monetized, supply chains get wrecked, central banks get forced into printing, and every time that happens, fiat gets weaker. And Bitcoin, over the long arc of time, gets stronger. So while people are all caught up in the emotional response of these short-term candles, I'm watching the real play unfold. Because when Iran versus Israel heats up, it's not about the region. It's about the oil. It's about inflation. It's about U.S. involvement. It's about shifting alliances, military spending, global trade, and energy costs, all of which eventually hit consumer economies, stock indexes, and yes, crypto flows. And when that spillover hits hard enough, when the dollar begins to weaken as war costs stack up, Bitcoin will be waiting, quiet, consistent, with no central banker to call, no army to defend it, no territory to invade, just code, consensus, and conviction. The key isn't to chase green candles during chaos. It's to build conviction when everyone else is panicking. That's what separates traders from tourists. That's what separates people who understand Bitcoin from the people who just ride the hype cycles. You can't fake conviction. You either believe in the long-term asymmetric bet or you're just another flipper waiting for the next safe entry that never comes. Let's be honest here though. If you're waiting for the news to look good before getting into Bitcoin, you're always going to be late. It was born out of the ashes of the banking collapse. It feeds on distrust, and trust me, war erodes trust faster than inflation ever could. Right now, the headlines are noisy, the charts are confusing, sentiment is fractured, and that's exactly where opportunity lives. While most people are frozen waiting for clarity, the smart money is slowly repositioning, watching key levels, noticing how Bitcoin holds its higher lows even in the chaos, spotting accumulation zones while the masses argue on X, aka Twitter. Bitcoin doesn't care about your opinion. It doesn't move based on political sides or personal emotion. It moves based on supply, demand, and belief. And belief is forged in uncertainty. We've seen this play out before when Russia and the Ukraine conflict. Does no one remember this? I mean, Bitcoin did dip. Then it rallied. U.S. bank collapse, the same story. China bans, again and again, the same short-term pain with the long-term gain. That's the pattern. That's the rhythm. The only question is, do you have the patience to ride it out? Because when the world is on fire, Bitcoin doesn't panic. People do. The market doesn't care how scared you are. It just moves liquidity where it's respected. And if you want to win this game, you can't think like the crowd. You have to move like the liquidity does. This moment in history isn't just another scary headline. It's a turning point. And turning points don't scream buy now. They whisper, they test your belief, they shake your strategy. And if you're weak, they flush you out before the real move even starts. So here's the play. Zoom out, keep your edge sharp, stay risk aware, but don't get emotionally manipulated by narratives you can't control. Watch the price action, not the panic. Track the smart money footprints, know your invalidation levels, protect your capital, but don't lose your thesis. Bitcoin doesn't need a perfect world to thrive. It was built for this one. Chaotic, unpredictable, unstable. In fact, the more unpredictable the world comes, the more inevitable Bitcoin even looks. So let the headlines scream, let the analysts panic, let the markets chop. The next great rotation is coming. From fear to freedom, from confusion to clarity, from fiat to crypto. And when it comes to that, I know exactly where I'll be. Loaded, convicted, and ready. Thank you so much for watching this video. If you made it to the end, I appreciate you guys. Make sure you argue down in the comments on what you think Bitcoin's actually going to end at in the next 6 months, next year, next 5 years, whatever your prediction may be. I appreciate you for joining the ride, and make sure you leave a comment below and subscribe, okay? All right. Thank you.